Good morning, Jags. Today is Tuesday, July 14. This is Fahad. Let's get started. I want to take a look at FISV. Now, we know that this position has been a trouble for us for the last couple of weeks. It has been gradually pulling back, and the position has not quite performed as it should have. But I want to bring it up. It's gonna likely going to pop and potentially pretty strongly. So when I'm looking at the option chain, just keep in mind that this thing is going to open rather flat. When I'm looking at the pre-market price action, it closed at $94.36 yesterday, and it's going to open pretty much right around that. But look for this to potentially make a run in early part of the trading or as the day progresses. And if you catch that run and you see any kind of pickup in short-term call option activity, particularly in the July 95 or 100 strike calls, or even if you go out to the August 95 or 100 strike calls, there might be some good opportunity there for a short-term pop in the stock. There is very, very heavy one-sided bullish action that has been accumulated in this name for quite some time. As you all know, we have discussed this on multiple occasions. So particularly if you look at the 5,900 open interest in the August 105 calls, then 20,000 open interest in the September 105, and then 32,000 open interest in the December 100 calls. What I'm talking more about is a short-term potential day trade for a quick pop once the market opens. I bring this up because if you go to today's first trade that came out earlier, in case if you missed it, two analysts are taking providing a bullish view, and the one that's going to be most noteworthy is going to be this Goldman Sachs. Goldman Sachs is initiating the stock with a conviction buy rating and $125 price target. So that's more than 30% upside potential from here. And the analysts started with 15 companies in the payment and IT services space, favoring the ones that have the strongest secular growth trends, and those with the opportunity for total TAM or total addressable market size expansion. And as they found out, as they basically drilled down their research, they came to like FISV, symbol FISV, as one of the most defensive business models. And they're saying that the recent sell-off underappreciates its long-term earnings power. And right above that, also you will see that Barclays is recommending getting long the stock is over here as well, as they believe this is a unique buying opportunity. And they're telling their investors that in the second half of 2020, the near-term margin headwinds will become tailwinds. Basically, that risk will gradually start to dissipate, which should provide some clarity on the earnings trends. Margin is always a very, very important factor when it comes to, particularly for the payment sector, payment and IT services group, to look at whether the company is losing pricing power or not. So they believe that that trend is going to improve gradually from here into the second half of 2020. And then we're going to see the top line revenue growth also remain robust. So two bullish notes out from two key analysts, one with a conviction buy rating at Goldman Sachs. And as a result, given how significant amount of call option activity has been recorded in this group, and the chart has pulled back in the last month or so from high of 108 to 94. If this thing opens flat, look for a quick short-term pop and potential quick run towards $100 per share. And if you can catch that move, like I said, with either short-term call options or just building a position in the long term, I think it will be one way of trading. Next thing I want to mention real quick is the more I look at Walmart, the more I continue to like this opportunity. You know, a random thought occurred to me this morning when I saw yet another news about Flipkart, and I'll mention this in a moment. Another thought basically occurred to me, which was, why is this only a $365 billion company in terms of its market capitalization? Maybe we are witnessing Walmart as an opportunity for the next couple years that should really be re-rated with a significantly higher multiple and significantly more conviction on the street. Maybe this needs to be 500, 600, $700 billion company, potentially double of what the market is pricing it today. Now, let me just give you quick high-level views. For the longest time, I have talked about this. If you go back and look at my research notes from the past, in fact, when I went to Las Vegas at the AAII conference back in November of 2018, I gave a half-hour presentation on Walmart at that time as well. And then other times there was the similar kind of large conference from Traders Expo in Toronto. And I talked about Walmart at that time too, which is that the biggest misunderstood piece about Walmart is a large growth segment that has emerged, which is India. As you know, the company bought Flipkart for $16 billion a couple years ago, which gave it a commanding lead. They were able to overbid Amazon, which was also trying to buy Flipkart. And that gave basically pretty much the entire e-commerce market, a lion's share of the e-commerce market, to Walmart. And then if you look at today's first read, we're starting to get some glimpse of how this coronavirus-led shutdowns is starting to help Walmart further make progress in the online business. So Walmart has invested an additional $1.2 billion in India's Flipkart to increase its stake. Flipkart recently surpassed 1.5 billion visits per month and reported revenue growth of 45%. Oh, sorry, not revenue growth, reported 45% in monthly active customers plus 30% growth in transactions per customer for fiscal year 2020. We have this very large market, e-commerce, evolving in a hyper growth market in India. Flipkart is the leader. Walmart is the biggest shareholder of Flipkart, and they're going to remain major beneficiary of this trend for a long time to come. And then when you move this and then you come back to the United States for discussion over here, I think that the second quarter earnings that's going to come out is going to blow estimates out of water. First of all, because the same kind of strong secular trends that we saw previously in Q1, which benefited only during the March shutdown, are now going to benefit the entire quarter. So the shutdowns began in early March, and so the company had only 1 month of the 3 months in Q1 earnings report that benefited. This time it will be entire quarter. And secondly, just 2 weeks ago, we learned that Walmart is going to launch Walmart Plus, which is going to directly compete with Amazon Prime service, which is going to provide new deals, same-day delivery, even including groceries across the entire United States. And I believe that's in the early phases of launching across the country. I look at these trends and I look at the stock with a powerful high volume breakout. I don't think you're going to see much more significant pullback in this stock from here. I think pullbacks in Walmart is going to remain shallow. And I believe we are underestimating the potential that we have in this particular stock. And I don't think it should be worth only $365 billion company when you look at the online peers and what they're trading at as much as 6-7 times sales. This becomes a very, very interesting long-term opportunity. I think maybe it needs to go all the way to $200 per share, $250 per share. Just putting it out there. We're going to continue to do some more work around this, provide some more ideas, but I continue to really, really like Walmart's story. It's a large cap, big value plus growth name that potentially becomes an important asset to own basically in everyone's portfolio, similar to Amazon was and still continues to be for a lot of shareholders. So I just wanted to put it out there. That's it from me. Chronicle, what's up?
Morning, Fahad. Looking at bearish paper industry trends today, which have gone a bit under the radar. Paper is the one commodity that hasn't seen a rise in prices in recent weeks, while just about everything else from ag products to wood to crude oil and even gold have all seen inflation. KeyBank has been out with regular notes on paper and updates from RISI, and recently it's just been one bearish note after another. just this week alone, there have been several significant updates within this space. Firstly, according to RISI's contacts, Domtar, symbol UFS, will be extending the downtime at their Ashdown uncoated freesheet factory through August. And this follows a report from 2 weeks ago that the company would be extending the downtime at its Kingsport factory in Tennessee. So in total, that's now 3 high-profile mills that Domtar has idled since early April. If we look at the chart of the stock, well, it's not really recovered at all since the March crash. And similarly, Packaging Corp, symbol PKG, announced late June that it's going to keep one of its 2 uncoated freesheet factories idle through August. And KeyBank is saying this is all because of sharply deteriorating demand. And this is more of a secular trend because demand for uncoated freesheet was already in sharp decline even before the pandemic. And this is something we've written about in our Jaguar Q1 outlook earlier this year with our bearish view on international paper. And with regards to international paper, KeyBank also mentioned that containerboard export prices in July are currently falling in both Europe and South America. And according to their channel checks with US exporters, there's apparently too much supply going around, with some respondents even expecting prices to fall again in August. So that's Q3 guidance right there. What's really caused all of this is that North American producers have been allocating 25% of their production for export this year, which is much higher than the 20% last year. So as a result, the gap between export production and falling export demand is currently almost the widest it's ever been. And thus, export prices are going down to compensate for this. So putting all this together, there's nothing to like about paper right now, and it's lagging all the other commodities for very good reasons. Last week, I talked about struggling retailers like PLCE with the holiday period now behind us. And if we're looking for more short positions to protect our long book, the paper industry is another area we can look at. Personally, between containerboard and uncoated freesheet, I'm more bearish on the latter. So I think Domtar is the one that's going to see the most pain this upcoming quarter. Like I said, uncoated freesheet demand was already in secular decline, whereas I think containerboard still has medium-term tailwinds from e-commerce. Like even if Amazon is starting to move away from corrugated packaging, that's still going to take time, which I suspect is why US containerboard mills are still operating at an average rate of 90%, which isn't too bad.
One quick question. So this, from what I understood from the quick discussion, it seems to me that the main reason for the revenue shortfall and the further erosion in the business trends is mainly driven by weakness in pricing. Is the weakness in pricing really a function of demand destruction that is resulting from slower economies? It seems like that's mainly the primary driver over here. Or are there other things, which is also leading to closure in case of UFS, 3 major mills? They're probably trying to bring the supply and demand back in balance. So is it really the demand destruction side of the story that is far more prominent over here than other factors?
So the supply side of the equation has been a secular trend. This market has always been oversupplied with too much capacity, and this demand trend is more recent from COVID-19.
Okay, yeah, that's what I thought too. All right, great stuff. Jay.
Morning, Fahad. So today I just want to talk about Fox Factory Holdings. Ticker is FOXF. For those that do not know, this company caters to the sort of the outdoor adventure vehicle market. They don't make the vehicles, but rather they make the products for mountain bikes, ATVs, snowmobiles, etc. So last night, Ford Motor came out and revealed the models and the specs for the much anticipated Ford Bronco, which are being marketed as an ultimate outdoor adventure vehicle. Stiefel is out today with a note talking about, in the press release, Ford Motor talked very highly of their HOS system, which is high performance off-road stability suspension. and how this is a standard feature on all of the Bronco vehicles. The problem is that this premium Haas system, it's going to feature Bilstein dampers and shocks. Bilstein is a competitor to Fox Factory. So the appearance of a competitive loss on the Bronco platform to Bilstein is likely to be a source of selling pressure today. And it looks like pre-market shares are down approximately 5%, even though it's on a light volume. And one of the reasons Stifel was sort of shocked about this was because Fox Factory has had success with the Ford Raptor. So they were ultimately considered to be the incumbent and well positioned to win all of this incremental business with the Bronco. So needless to say, this is deemed a disappointment for right now. But that's not to say that a month from now, you might get a press release, talking about how Fox Factory is going to be a part of the Ford Bronco. But right now, near term, since they were left out of the press release, you're going to see some near-term pressure on the stock.
Near-term pressure on the stock, so potential breakdown from this wedge. The question is that the trends that we have seen in the bicycling during the shutdown, and the company has huge exposure to that, would they generally basically provide a bid underneath the stock on a pullback and may actually end up presenting another buying opportunity, I guess, is the more important question. Purely from a technical standpoint, if this thing does break down from this wedge, we're going to start to see some VOP support starts to come in around $75 per share. What do you think about buying this stock on a pullback down to 75 if it gets there?
I think it'd be a good idea.
Because
the checks have been, as you mentioned, positive.
Yeah, here are the checks from Bank of America that came out just a couple of days ago, and Fox Factory has a huge exposure to mountain bikes, and according to Bank of America, debit and credit card usage, it has been up just ridiculous. It was up more than 103% in the month of May, which was a sharp acceleration from double-digit growth, I think close to 40% growth in the month of April. And if you look at the Google search trends for bicycle, they have accelerated in the last 2 months significantly. So, and then similarly, mountain bike Google trends on a trailing 4-week period, they have also surged sharply. There have been significant amount of increase in that part. So Fox Factory has a huge exposure. In fact, is one of the biggest provider of those mountain bikes and also related assortments as such. I think it's going to pull back, but I think what we need to be on the lookout for is whether any pullback potentially down to 75 level actually becomes yet another buying opportunity at that point going into the next turning cycle, which is going to be sometime, let's see, last week of July, so July 29th. Interesting take. So this is one way of basically we could just put something up on a watch list and look for that washout on a news that is going to kill the stock today or possibly for the next couple of days, only to come back in and scoop those shares on the pullback. Great stuff. Avo.
Looking at the RDWR, RDWR today, they report earnings at the end of the month. Spotted a couple of at first I thought it was related, but it's not. Two separate bull risk reversals last night or yesterday that were done. First one September 26-24, and the other one is December 26-24. At least they were not done at the same time, and it's not a roll of any sort. So two separate trades that are reflected in open interest this morning. Each one was 500 contracts. Which is unusual in terms of amount. So
nice chart, and those are the kind of sneaky contracts that I look for, where the big ideas, the big size trades or volumes gets everyone's attention, but then the sneaky buyers are the ones that that becomes the upside. And a nice technical breakout, I have to say, considering the market was getting destroyed yesterday, big time, on a major reversal.
Yeah, and also after a long period of consolidation. RDWR is a cybersecurity related stock, which is based out of Israel, but obviously they do a lot of business elsewhere, especially in North America. Just reading through looking at their investor presentation from, when is this? From May. So this was, their last earnings was beginning of May. So at that time, there was some uncertainties of how things were working. But I think there's a little bit better image, the picture now if I were to look ahead from what they were talking. At that time, they had some problems shipping products out because some airports were closed in the quarter that led up to May. So I don't think there's that problem. They did indicate though there was more interest and increased demand for cybersecurity software. They also talked about their partnership with Cisco, which is increasing is bringing increased number of customers in. And more recently, after earnings, they had been selected by a global tier 1 service provider in Latin America for attack defense mitigation services, multi-million-dollar deal, which for this company is pretty interesting because they're not a billion-dollar company yet. So I think there's a good chance that they will have good earnings, but this is also looking further ahead than just July earnings.
Yeah, Capterra is one of the sites that analyze the data recently on the overall spending environment for cybersecurity names. And this report came out yesterday, which may have actually powered this stock higher, in which they mentioned that COVID-19 pandemic has amplified powered security flaws as everybody is working from home. And this has resulted in 1 in every 3 people falling victim of phishing attacks, as well as many other things. So we have seen the same kind of trends appear in Fortinet and Palo Alto network that provide the firewall protection, and we have seen some positive channel checks appear for those companies as well. And so this report is what may have sparked that significant run in the stock today. And it's quite obvious. It's very, very simple. So for example, on the biggest ever cybersecurity threat, COVID-19 is now posing the biggest ever cybersecurity threat, causing phishing attacks to rise by 600% since February as malicious actors trick users via fake coronavirus alerts. This is forcing businesses to rethink and overhaul security strategies in an increasingly vulnerable landscape. And it just goes on to show how every single little piece of element has been benefiting these companies. So I think you're right. I think we're going to see, particularly, I like the chart technical breakout. I like the bullish reversal being bought. And then I think it's where we are going to see some good earnings season from all cybersecurity companies. So good stuff. All right, guys. Great. That's it. And we'll see you in the chat room shortly.